Thank you, and welcome to the F word understanding the language of business session. So, thank you all for joining into this session. I do think that this is a very important topic for a lot of businesses, and right now, what we are definitely seeing a lot of is that more and more people are really finding themselves having some very important conversations about business. But one of the challenges that a lot of people tend to run into is in some of those conversations, they don't quite feel like they are prepared for those conversations because there's certain words that are being used, there are certain topics that are being brought up that they don't always feel like they really have a good handle on what those topics are, or even how to answer some questions as certain terms are being used. But one of the very important things about the journey of any business owner, if you're looking to really raise capital for your business, so you're looking to attract different investors, one of the most important things is that you are able to reach a level of understanding with the person that you are speaking with. And when it comes down to reaching a common level of understanding, a lot of it has to do with the language that you use. Because what you don't want to do is you don't want to communicate the wrong message by using words in ways that don't connect with the audience, or whether the audience or the potential investors that you're speaking to, whether they are using words that you don't understand, that you don't connect with. So in this session, because I'm actually doing two sessions for this conference, today we're really going to talk a lot about some key terms and things that you need to understand. Tomorrow, I'm going to go a little bit deeper into actually how you tell the story. Now, in order to be able to share and tell a good financial story, because the financial story makes all of the difference. I mean, from whether or not you can attract and hold the attention of someone who has interest in your business. And so today we're going to talk about some key terms that you'll need to know to be able to tell a really good story. But before we jump into that, to give you a little bit of context on myself, my background is accounting and finance. And I went to school, undergrad at a small school called Lander University in South Carolina. And then I went to graduate school at the University of Notre Dame to get a master's degree in accounting. And in the process of doing that, there was a lot of things that I came face to face with realizing is that finance was not in accounting. It wasn't a topic that was talked about in my home. I didn't come from a home where this was common knowledge. The only time that I really heard about accounting and finance is when I would occasionally flip through channels and land on that channel that had all these numbers scrolling at the bottom of the screen, all these different stock tickers and stuff like that, to where I really didn't understand what was going on there. I really didn't understand, what was being said on that. And it took me some time of really digging in to learn. But over the years of working in finance and accounting, I learned a ton. And then from after school, I went into working for one of the four biggest accounting firms in the world, did a lot of auditing. I learned a lot, got to see behind the scenes of a lot of major companies, and really saw how they thought about business. To be in the room with senior level executives, to hear the types of conversations that they were having. And it really opened my eyes to a lot that I just didn't know before. And from there, I started working with Fortune 500 companies and doing different roles in finance. So really understanding not only just the accounting and the technical side, but how do we take what we do in finance and then how do we make sense of it for making operational decisions? And by far probably the most impactful role that I had, during my time in, I would say probably three very impactful roles. The first one was I worked in investor relations. And in investor relations, my job was to work with two other people, the VP of Investor Relations and the Director of Investor Relations. And what we would do is we would work with the senior level executives, the CEO, the CFO, in helping craft the story of how they were going to communicate to the Wall Street analysts. Now, at the time I was there, the company had revenues of north of $14 billion a year. So it was a really, really big company. And it was one of the original companies that was on the Dow Jones Stock Exchange or stock index. And one of the big things that I spent a lot of time doing was reading through the Wall Street analyst reports. So all of these major Wall Street banks that invested in companies like that, my job was to sit through and read their analyst reports, read their analysis. And in some cases, when I saw mistakes or I saw errors in the things that they were saying and the things that they were doing, bring it up with the executive team and saying, hey, here's what we need to do to address this. Because being in investor relations, there's only so much information we can make public without it triggering an SEC issue. So that role really opened my eyes to a lot about when it comes down to investing and how you tell the story and what terms matter and also who's paying attention to what. And in that process, I also got the chance to meet, different hedge fund leaders and also different major investors who, some of their average investment amount was they were trying to decide what to do with a $500 million investment fund. Like, what company should they invest in? And when you sit in rooms like that, you tend to hear conversations that are at a level that you are like, wow, this is what really gets talked about in these types of rooms and these types of settings. And then from there, I went back into working in the business and really working in different segments of helping with M&A activity where we were either buying or we were selling a business. And then eventually my wife and we moved to the Charlotte area and I started off working with a tech company in Charlotte, North Carolina, and helping them buy other companies. And then we went through a round, we helped them raise about $65 million in private equity funding. And a lot of that was just helping craft that story, supporting that journey of how do we communicate with our investors to make sure that we are telling the story and being as clear as we can be about where we are, where we're going, and to do it in a way that really piqued the interest of potential investors that would then invest in the business. And like I said, during my time there, we were able to raise over $65 million in private equity funding, which allowed for a massive expansion and continued growth of the business. And from there, I decided I had all the pieces that I need to lead that and to start my own firm. So now I run my own firm, the TL Turner Group. We focus on bookkeeping and CFO services. And on the CFO side, we spend a lot of time helping entrepreneurs and business owners craft the financial side of their story. I mean, we've done some partnerships with the local economic development centers. We've also worked with some universities. And one of the things that we get a lot of calls on at times is we get calls from different companies or different organizations that are sponsoring pitch competitions. And one of the common things that they tell us is they say, hey, people really struggle telling the financial story of their business. So one of their requests to us is, can you give some time to some of our top contestants and help them understand how to better tell their story? And we started doing that last year and working with, different organizations that are hosting pitch competitions where they're giving out funding to entrepreneurs. And since we've been doing that, some of the entrepreneurs that we've been working with and consulting with, they've been landing in the top one or the top, two positions, and they've been able to get grant funding. They've been able to win pitch competition because a lot of it comes down to how you tell your financial story. And so outside of doing all that, like I said, our firm is recognized in the New York Times in 2021 as a top Black-owned business that you would love. And then also this past year, we've been recognized as a I was recognized personally as a national 40 under 40 Black CPA. And one award that I was notified of it, that it is coming out, another 40 under 40 award related to finance and valuations is coming out. Since they haven't announced it publicly, I can't say the name of the organization, but there is another award on the way because of the work that we're doing to support small and medium-sized businesses, of really helping people understand these things that are talked about in very important rooms that often don't get shared with everyone. And so what our goal is how do we help do that? And that is why my wife and I, we started a media company called the Business Talk Library. And there we do a lot of speaking. We post a lot of content, create a lot of videos, some courses. Most of the stuff we've done over 500 videos and podcasts, and the combination of such that we've released for free in the past, I would say in the past 2 years. And part of that is because we are trying to get the message out about things that people don't commonly hear, because maybe they haven't been fortunate to be in some of the rooms that we've been in. So our goal is, how do we take those things that we know, things that we were exposed to, and bring it back to small and medium-sized businesses? So the first thing that I think that we really have to establish is the core of understanding the language of business is accounting. Now, there's a famous saying, and I believe that the first person to say this one, or the person who's probably the most popular for saying this, is Warren Buffett. But I believe that he's even talked about, like, it's not his original statement, but it is true that accounting is the language of business. And one of the things that I tell a lot of entrepreneurs and business owners is that if you don't know how to tell your accounting or your financial story, then you're not going to be able to communicate well with other people when it comes down to trying to get investment in your business and trying to grow your business. Because the reality of it is that most people don't get into business because they love the financial side of it. Now, they want the financial rewards, but they don't necessarily love the getting into the details of the finance. They want the outcome. But the challenge about that is that you won't be able to get the financial outcome that you want if you don't develop a good, solid foundation or a basis for understanding this part of your business. And so, to make it simple, because I don't think that you need to go to school to get a degree in accounting or go get a master's or become a CPA. I don't think that you need all of that. And to be honest with you, if I'm being very, very frank, most of the stuff that I learned in college and studying accounting, I don't necessarily use it on a regular basis. Now, there are some cases where you do tend to use a lot of it, but for the most part, when it comes down to dealing with, medium and small size businesses that are in that phase where they're looking to raise capital and they're looking to grow their funding, we're not really talking about all the technical stuff that I learned in accounting. And so what I did is, for this session, is pulled out some of those very key topics that I have seen in common transactions and things that I think that you should probably add to your vocabulary. And I think that you should also understand what it means. So now, when you start to hear other people talking about their business, you'll be able to think through these terms and you'll be able to think through these topics to help you kind of better understand, what is that person saying? What does this mean? Because it will make you not only a more informed person, but it will make you a better business operator if you understand these key things. So the way that I think about it is, I break it down into 3 key areas. The first one is going to be people. The next one is going to be concepts. And then the last one, we're going to dive a little bit into some of the key financial terms. So for the people, it's really thinking about a business. When you're going to have any type of investment conversation, there are some common things that you're going to hear and some common words that you're going to hear used and some common, I guess you would say, subject matters that come up. And in the area of people, a lot of times you may hear investors, or let's say a potential investor who's looking at your business, maybe looking and asking you, like, Do you have any partners in the business? Now, depending on how you look at that word, some people understand partners as, is your business structured as a partnership, meaning, you own X percent, they own X percent. Now, a lot of times when investors are asking, do you have partners in the business? They're not asking, are you legally structured as a partnership? Sometimes what they're referring to is, do you have a co-founder, or do you have someone else who is as deeply invested in the business as you are? Now, one of the things that you may want to do when an investor asks about partners is you may even just ask them, okay, in this context, how do you define a partner? Because that makes sure that you understand what they are actually asking. And then also when it comes down to investors. Now, when it comes down to an investor, a simple way to think about investors, and the reason why I think this definition is very important because a lot of people miss this. A simple way to think about investors are these are people who believed in the vision of a company enough to put their own money at risk. So when you think about an investor, and I tell a lot of businesses this when they're like, hey, I need to find an investor. One of the things that I tell them is make sure you understand what you are asking a person to do when you are asking them to invest in your business. You are asking them to believe in the mission and your ability to execute enough that they would put their personal money or money that they're responsible for, that they would put that at risk to support your mission and your ability to execute. And so one of the things that helps a lot of businesses that I have spoken with and talked to is it helps you put in perspective. It helps you start to understand like the gravity of what you are asking someone to do when you are asking them to be an investor. Because in many cases, especially if you're a small or medium-sized business, people are putting some of their own funding into your business. Now, when you get to some of your larger investment deals and your private equity funding and your VC funding, is they may not necessarily be putting their personal money in. They may be putting money that they are responsible for managing in, but you do want to grasp the gravity of what you are asking an investor to do. The next part that comes up a lot of times in conversations are board members. Now, what board members are is some of your top key employees, like your CEO or typically some people in the C-suite may also be board members, but a lot of times they're going to be individuals who may not be employees in the business, but they have some type of specialty that will help the business move forward, where they become an active advisor for the business. Like one tech business that I was working with, they were in the fintech space. So some of the board members that they brought on were people who were former executives for large banks in the payment processing space, to where some of those board members had experience and they had a unique perspective that would help the startup grow faster, that could shine a light on different things. Now, when it comes down to a smaller business or a medium-sized business, you may be looking at it and saying, okay, all right, who should be on my board? One of the ways to think about that is to ask yourself, what are the critical skill sets that we need to actually help the business move forward? And do the people that you are inviting on your board, do they have experience in those areas? Do they have skill sets in those areas? Because as an investor looking at your business, they not only want to believe in the mission of your business, they also want to understand is, do you have the right advisors around you to help you actually achieve this mission? And then you will hear sometimes where some businesses or some investors will ask about, stakeholders. Now, stakeholders are very different from shareholders. Stakeholders are people who have an interest, some of it's direct, some of it's indirect, in the success of your business. One of the most obvious examples of stakeholders are the people in your community or your employees. Like, they have a huge interest in whether or not your business is successful. They may not necessarily be owners, but they do have an interest in seeing the success of your business. And a lot of times people are not aware of who the stakeholders are for your business. Like, you know what, who's going to be impacted if your business succeeds or if your business does not succeed. And then, of course, you don't want to forget about your customers. Your customers, and the best way that I can explain this for a lot of people is your customers are going to be the people who pay for your product or your service. The reality of it is you may be giving your product away for free. And in your conversation with investors, they may ask about customers, and you may talk about, oh, the people who are using the product and, they're, I guess, taking a trial of the product for free. If that person is not putting money at risk to actually buy your product or your service, to many investment conversations, they're technically not a customer. They may be a person who may be giving you market feedback, but until they put their money at risk to actually own your product or to utilize your service, technically you don't really have a customer relationship. Now, also another one are going to be vendors. You'll that will play a role in your story. And what a vendor is are the different third-party companies that you do business with that enable you to provide your product or your service. The other areas are going to be concepts. Now, one of the things that you'll hear, and I'll go into a little bit more detail about this tomorrow, is valuation. And I like to group multiples together because valuation is simply how much is your business worth. Now, multiple gets into how you actually calculate what your valuation is, which we're going to get into that a little bit more into the story when we talk about that tomorrow. The other terms that you may hear about is solvency, and that really gets into is, do you have enough assets to keep your business alive? Now, one of the things you want to make sure that you understand that most businesses go out of business not because they have a bad business or not because their product doesn't work. Most businesses go out of business is because they run out of cash. So from an investor, they may be looking to see how solvent is this business? Like, do you have enough assets to keep operating? Another concept you'll hear about is leverage. Now, leverage is a very, very important concept. Now, this is where you really start to look at your debt and how smart you are using debt to grow the business. And again, we'll talk more about that. Now, when it comes down to equity, equity is a term that we hear used in different contexts. Now, one context you may hear discussed is social equity, which has to do with human relationships and how one group compares to another. Then you may hear about financial equity, which is a common term you'll hear about investors, them putting their money into a business. And then you hear about accounting equity. Now, accounting equity is the simple assets minus liabilities. And so we'll discuss that a little bit more when we get to the telling the financial story. Now, the piece that I really want to call your attention to is when it comes down to key financial terms. And I tell people all the time is take a screenshot of this. Whenever you are trying to craft your financial story, one of the key things that I am looking for when I am reviewing a pitch proposal, or when I am putting together a pitch deck, or sometimes companies call me and ask me to do due diligence for them, meaning I'm reviewing the pitch of another company. And these are key financial metrics that I am looking for. So when you are telling your story, one of the things that you want to make sure that you are doing is that as you get ready to tell your story, you can discuss what does the revenue journey look like. Now, as I said before when I was talking about customers, is that your customers are going to be your paying customers, not the people who use your product for free, but the people who are actually paying to use your product or your service. And you really want to be able to tell the story of what's going on with my revenue. Now, also what you want to explain is you want to be able to explain, how do you get revenue? Is your business a subscription, meaning people sign up and they pay the same amount month over month? Or is it project based, meaning people pay a one-time price every time they utilize your product or your service? So you want to make sure that you can tell the story, you understand how do I talk about and define the revenue. Now, gross margin is when you think about your product or you think about your service, the revenue is the price that the customer is going to pay. But one of the other factors that you want to think about to get down the gross margin is how much does it cost you to provide that product or that service? And when you think about that cost, you want to ask yourself is what are all the costs that I am paying specifically to deliver this product or this service? For example, in my firm, we provide bookkeeping to a lot of medium-sized businesses. One of the areas we've been working a lot with are our law firms. So when I think about to calculate my gross margin, one of the things that I have to think through is, okay, all right, what are all the costs that are directly related to supporting these law firms? So I have to think about the bookkeepers who do a lot of the back end, the software that we use to specifically support the reporting and those type of contracts. And then also all of the different programs that we use. Now, there are other costs related to my business, but they aren't directly tied to delivering the revenue. So when you back out what are your direct costs, you're going to get to what you call your gross margin. Now, this becomes a very, very important thing for investors. And the reason why is because if your gross margin does not exceed a certain level, then what investors are quickly calculating in their head is if your gross margin is too low, then you're never going to make money in this business. Like this business has no chance of making money. So one of the things that you definitely want to make sure that you understand is how do you calculate your gross margin? The other aspect that I think you really want to pay attention to is your OpEx, or you may hear it as your operating expenses. Now, what this covers are all of the other expenses that are related to operating and running your business. Now, these are all of the back office expenses, the things that are not directly tied to the customer delivery, but they are important for you to run your business. So you want to understand that. Now, Ebitda, which is a term we'll talk a little bit more about in the story, is what that stands for is earnings before interest, tax, depreciation, and amortization. Now, a simple way to think about this is that when you're running a business, if you take out a loan, there's going to be some interest that you have to pay. There's also going to be some tax implications. And then for the depreciation and amortization, a lot of times, if you make a really big purchase of something, let's say, at your business, you purchased a building. Now, when you're looking at financially, that building is going to be used over time. So you don't want to take all of that expense like on day one. What typically happens is you end up depreciating the value of that building over time. And so that's what falls into your depreciation. So the key thing there is investors want to understand what does your earnings look like before that extraordinary stuff, which brings you down to helping them understand how well are you operating the business? Like if you didn't have the interest, the taxes, and the depreciation, how well are you actually running the operational aspect of the business? How profitable is that? And then we get down to net income is where you add back in those interest, taxes, and depreciation. Cash flow is one that we'll talk a little bit more about tomorrow. And then ROI is probably one of the most, I guess you'd say, overlooked parts of the story when it comes down to really telling your financial story. And we're going to dive into that a bit more in detail. But one thing I want to leave you with is if you are trying to figure out, what terms really matter to the audience and the investor that you are speaking with, one of the things that you want to make sure that you do is you want to make sure that you understand, you do a little bit of homework on the potential investors that you're talking to. Now, I put these as cheat questions because even if you don't know a lot about your potential, audience that you're speaking to or the potential investor, and let's say you don't have the ability to do a lot of research on them, but if you do have the chance to either have a conversation with them or someone that knows them, these are three common questions that I have seen people ask that have really helped you gain a lot of helpful insights so that you know how to craft your financial story. As I said before, when it comes down to getting and attracting an investor to your business, a lot of that is going to come down to how relevant and how well you tell your financial story. And asking these questions beforehand will help you figure out how to really craft your message to tell a more compelling and a more interesting financial story. So definitely come back tomorrow, because tomorrow we're going to be diving into some specific examples of how to tell the financial story. Thank you guys so much for tuning in to today's session. I would say enjoy the rest of the main stage sessions as well as the breakout sessions throughout the day. And I will see all of you back tomorrow. Thank you.